Welcome to the deep dive.
Great to be here.
We take complex information, stacks of it really, and boil it down to what you need to know fast.
Making you well-informed.
Exactly. Today, we're plunging into, well, might sound a bit niche at first glance, the global jewelry insurance market. But trust me, it's actually packed with surprising insights.
Okay, I'm intrigued. Jewelry insurance.
Yeah. Our mission is simple. Unpack a recent market analysis report. We want to pull out the key data, sure, but also the stories, the unexpected trends hidden in those numbers.
The why behind the what's.
Precisely. And here's the hook for you right away. This market, valued just under $6.5 billion in 2021.
Okay.
It's projected to practically double. We're talking soaring to $12.16 billion by 2033.
Wow, that's significant.
It really is. That's a compound annual growth rate, a CAGR of 5.4% projected from 2025 to 2033.
And just to clarify for everyone, CAGR smooths out the growth rate, shows the average yearly expansion.
Exactly. So a consistent 5.4% growth year on year for almost a decade in a multi-billion-dollar market. That signals something pretty fundamental.
A deeply rooted need, it sounds like.
For sure. So, why does this deep dive matter to you listening?
Good question.
Well, maybe you're curious about these specialized global markets, how they tick. Or perhaps you track broader economic trends.
Or just interested in how people value and protect, personal things around the world.
Right. Whatever your angle, I think you're in for some really illuminating discoveries today.
All right, let's do it. Unpack those numbers.
Okay. So we set the stage. $6.47 billion in 2021. Then heading towards nearly $8 billion by 2025.
Okay.
And then that big leap over $12 billion by 2033. That 5.4% CAGR really underscores the speed here.
It's not just growing, it's like accelerating.
Yeah. And what's striking, as you pointed out, is how widespread this is.
It really is. This isn't just one region driving everything. This kind of consistent growth across such, different places.
Right.
It implies something bigger, a broader societal trend, maybe.
What do you mean?
Well, it suggests a global uptick in focusing on asset protection, wealth management, even at a personal level.
So more than just having more money.
Yeah, it reflects maybe changing attitudes towards luxury, towards security,
Yeah.
It's happening all over.
That makes a lot of sense. Okay, so let's look at the regions. Who's leading right now?
North America is currently at the top, right?
Correct, North America. Projected growth from about $2.56 billion in 2021
Okay.
to over $4.5 billion by 2033. That's a solid CAGR, nearly 5%.
Pretty steady. And within North America, the U.S. is dominant, I assume.
Yeah, no surprise there.
Yeah.
The U.S. is on track for about $2.8 billion by 2033. Canada is also showing strong growth, heading over $1 billion.
Okay.
But here's where the data gets, really interesting within the region.
Oh, yeah.
Mexico.
Mexico. What's happening there?
Rapid growth. Its market is set to almost double, hitting nearly $600 million by 2033.
Wow.
And get this, a CGR of over 6.1%.
That is dynamic, significantly higher than the U.S. and Canada.
Right. What does that suggest to you?
Well, it really points towards maybe a rapidly expanding middle class there, or perhaps just a stronger drive to protect, newly acquired luxury items.
A shift in consumer behavior.
Definitely. A really robust shift. It's fascinating.
It is. Okay, let's hop across the Atlantic. Europe.
A different picture there, I imagine. More mature market.
Sort of. Its projected growth is still healthy, from about $1.8 billion to over $3.3 billion by 2033.
Okay, still significant growth.
Yeah, with a solid 5% CAGR overall. But within Europe, it's varied.
How so?
The UK is actually leading the growth charge. Its market size is expected to more than double by 2033. Strong CGR there, over 6%.
Interesting. Ahead of Germany and France?
Yep. Germany and France are showing solid, consistent growth too, both over 5% CAGR, but the UK surge is notable. And then you have countries like Italy, Spain. Their growth is more moderate, around 3.5 to 4%.
Right, so even within Europe, quite a bit of variation.
Definitely. Shows it's not monolithic. Okay, pivot time. Asia Pacific.
Now this is where I expect to see some big numbers.
You will be disappointed. This region is truly the powerhouse of growth for this market.
Okay, lay it on me.
Started under $1.3 billion in 2021. Projected to soar to almost $2.8 billion by 2033.
Big jump.
Huge. And the highest regional CGR globally, over 6.6% annually.
Wow. And who's driving that? China?
China's a major player, absolutely. On track to hit over $1 billion itself by 23. Very strong 7.3% CGR.
Aggressive.
But there's one country with an even higher growth rate, The highest globally, in fact.
Oh, which one?
India.
India. Okay, what are their numbers looking like?
An astounding 8.453% CAGR.
8.5%.
Yeah, projected to more than double its market size by 2033, from around $131 million to $347 million.
That's remarkable. What's fascinating here is what's behind that kind of exceptional expansion in both China and India?
Good question. What do you think?
Well, it's surely tied to overall economic growth, rising affluence, but I suspect it's more than that.
Like what?
Like the deep cultural significance of jewelry in both countries, combined with this rapidly growing consumer class.
Right.
People aren't just buying more valuables, they're actively, embracing the idea of protecting them. It's almost a marker of financial maturity now.
A fundamental shift in how wealth is managed personally.
Exactly. It's a big deal.
And it's not just China and India, right? Though they are leading the charge.
No, absolutely. The report shows other solid gains, too. Japan, South Korea, Australia.
Yeah, all showing CAGRs between roughly 5 and 6.5%.
Right.
Robust growth across the board, really.
And even places like Singapore, Taiwan, Southeast Asia may be growing a bit slower, but still steadily expanding, contributing to that overall upward trend.
Definitely. Okay, let's quickly touch on the other regions. South America.
Emerging potential there, I'd guess.
You got it.
Yeah.
Market projected to roughly double, too, from $300 million to nearly $600 million by 2033.
Solid KGR.
Very solid. 5.7%. Brazil's leading the volume. But Colombia really stands out, an impressive core GR over 7.4%.
Wow, Colombia too. Interesting pockets of really high growth.
Yeah. Argentina, Peru also showing strong growth above 5%.
Okay. What about the Middle East? High value there, traditionally.
Exactly.
Yeah.
Known for its appreciation of fine jewelry. And the insurance market reflects that,
How so?
expanding from nearly $300 million to over $500 million by 2033.
Or
Almost 6% annual growth.
strong. Any leaders?
Saudi Arabia posts the highest regional growth over 6.4% CAGR. Market set to more than double.
Okay.
UAE, Turkey, Egypt, also significant contributors. Strong expansion.
Makes sense for the region. And finally, Africa.
Africa shows a steady ascent, growing from about $201 million to over $350 million by 2033.
And the growth rate.
A respectable 4.6% CAGR overall. South Africa leads, nearly doubling its market by 2033. Nigeria and the rest of Africa category also show decent growth, with the latter actually posting over 5% CAGR.
So growth really is happening everywhere, just at different paces.
Pretty much sums it up.
Mm.
Which brings us back to the big picture.
Right. So what does this all mean for you, our listener? We've just toured the globe, essentially.
Yeah.
North America, Europe, the booming Asia Pacific, emerging potential in South America, Middle East, Africa.
The trend is clear.
It's undeniable, isn't it? Across vastly different economies, different cultures, people are increasingly focused on protecting valuable assets like jewelry.
It's becoming more important everywhere.
It really underscores this global shift. Wealth patterns are changing, yes, but it's also about this growing desire to safeguard personal luxuries. It's becoming like an expected part of financial planning.
Peace of mind.
Exactly. It's not just about the insurance policy itself. It's about recognizing value and wanting security on a global scale.
So connecting it all back.
Yeah, if we synthesize this, the consistent, significant global trend is towards safeguarding these personal assets. It's happening everywhere.
Despite all the economic and cultural differences.
Precisely. It's a powerful testament to changing wealth dynamics, changing consumer priorities. As prosperity grows, globally speaking, so does that desire for security for treasured things.
So the final takeaway then, what does this all mean for you listening?
Well, it paints a fascinating picture.
It really does. This deep dive reveals so much about economic growth, yes, but also about evolving consumer behavior worldwide. And given this really robust growth, especially seeing it in emerging economies, what does that trajectory suggest?
Yeah, what does it tell us about how people relate to personal luxury now and that need for security in our interconnected world?
Right. And thinking ahead, how might this drive future innovations beyond just traditional insurance?
Especially as these markets continue to mature, new ways to protect assets.
Definitely something to mull over. Some food for thought until our next deep dive. When you think about protecting your most valuable assets, what comes to mind first? Your car, maybe your home.
Usually, yeah. the big ticket items.
Right. But what about the things you wear? The pieces that, sparkle and hold maybe deep sentimental value, but also often incredibly high monetary value.
Yeah. Things we might not always think about insuring properly.
Exactly. So today we're taking a deep dive into something surprisingly dynamic, actually quite intricate, the world of jewelry insurance.
Yeah, it's fascinating. It's way more than just protecting some sparkle.
It really is. It feels like this intersection of luxury, risk, and increasingly some pretty cutting-edge technology.
That's absolutely right. And while it might seem, a bit niche on the surface, the global jewelry insurance market is actually going through some really significant shifts right now.
Well, we're basing this on some solid research, right?
Yeah, our main source for this deep dive, it's called Jewelry Insurance Market Dynamics and Trends, and it gives a really insightful overview of what's driving all these changes.
Okay, great. So our mission today is basically to pull out the most important nuggets. What's fueling this market? What are the hurdles it's facing? And where does it seem to be headed? By the end, you should have a pretty quick, comprehensive understanding of a segment that's, frankly, far more complex and innovative than it might appear at first glance.
Definitely more than meets the eye.
Okay, so let's unpack this then. What's really fueling the growth in this seemingly specialized sector? It feels like something that's always just sort of been there.
Well, the core driver, you really can't deny it, is a rising demand for comprehensive coverage.
Comprehensive, okay.
Yeah, and especially from high net worth individuals. And it's not just about simple wealth increasing, it's more a signal that luxury jewelry is increasingly being viewed as a kind of volatile investment asset.
So less like just personal adornment, more like part of a portfolio.
Exactly. And that fundamentally changes how these consumers perceive their need for protection. They're moving way beyond just basic theft or loss coverage.
That makes perfect sense, the rising demand for comprehensive coverage. But beyond just, peace of mind against basic loss, what else are they looking for? What specific new dimensions are discerning collectors now seeking?
Right. So they're looking for policies that go well beyond the traditional stuff. They want coverage for, say, damage, mysterious disappearance, which is surprisingly common, actually.
Mysterious disappearance.
Yeah, and even market value appreciation.
Okay, that's interesting. Explain that bit.
So that means if the intrinsic value of, say, a rare diamond or maybe a vintage piece increases significantly over time, the policy can actually adjust to cover that higher value. It truly protects their investment then.
Gotcha.
And a really good example of this high-value jewelry space expanding and kind of creating this need is Shalaz's heritage jewelry in India.
Right.
They recently launched this personalized bridal collection. It's called Basra, and it features custom antique options. These are often, bespoke, irreplaceable pieces.
Right, one of a kind.
Exactly, which just intensifies the need for this really specialized and comprehensive insurance.
So here's where it gets really interesting for me. How are the insurers actually responding to this heightened, more diverse demand? Are they just tweaking old policies, or is there some genuine innovation happening?
Oh, they're absolutely innovating. They're offering incredibly flexible and tailored policies now.
Like what?
Well, things like worldwide protection, that's becoming standard. Agreed value settlements.
What's that exactly?
That just means the insurer and the client agree on a specific value for the item right at the start, beforehand, which, greatly simplifies things if there's a claim.
Avoids disputes later. Makes sense.
Precisely. And increasingly, you're seeing seamless digital customer engagement. All of this just makes comprehensive coverage more accessible and, frankly, a lot more attractive to people.
Okay, so beyond just the policy innovation itself, what about technology? What significant role is technology playing here? Is it just making things faster, or is it, fundamentally changing the game?
Oh, technology is a very strong growth driver. It's streamlining and securing the entire insurance process in really fundamental ways.
How so?
Well, take blockchain, for instance. It's improving authentication and fraud prevention through tamper-proof transaction records.
Okay, break that down. How does that work for jewelry?
So imagine like a digital ledger where every single detail about a gemstone, its origin, every appraisal, every ownership transfer is recorded immutably. It can't be changed.
Right.
It basically creates this unassailable digital fingerprint for each piece. Huge for provenance and fighting fraud.
Wow.
Then you've got artificial intelligence, AI, AI tools are enabling remote and highly accurate jewelry appraisals. That's a huge leap forward, especially for unique or complex items.
Remote appraisal, so you don't need to physically take it somewhere.
Increasingly, yes. And then there are digital documentation platforms. They make it super easy for consumers to create secure online inventories of their collection.
I like a digital vault.
Kind of, yeah. Which in turn speeds up and really simplifies claims if something happens. So ultimately, these innovations, they enhance underwriting accuracy.
Meaning how well they price the risk.
Exactly. How precisely insurers can assess and price the risk for each unique piece. And it boosts customer convenience. Both of those things directly boost market confidence and policy adoption. People are more willing to get insurance if it's easy and they trust the valuation.
Okay, it sounds like technology is solving so many of the maybe historical headaches in this area. But even with all this innovation and growth, there must still be significant hurdles, right? What are those sort of knots in the system that the market still faces?
Yeah, definitely. The chief restraints are, without a doubt, regulatory and compliance challenges.
Ah, the red tape.
Pretty much. Ensuring high-value jewelry across multiple jurisdictions, multiple countries, it means navigating these incredibly complex legal frameworks. It's not simple at all. It's more like trying to solve a global puzzle.
Can you give us some specifics on what makes navigating that legal puzzle so complex? Like, what specific regulations are we talking about here?
Absolutely. So insurers have to deal with really stringent anti-money laundering AML requirements and customer due diligence, or CDD.
Okay. Why is that particularly tough for jewelry?
Well, it's particularly challenging in the high-value jewelry market because of the inherent liquidity and, portability of these assets. Diamonds, gold, they're easy to move, easy to sell.
Right. Easy to launder money with.
Potentially, yes.
Yeah.
So rigorous verification of where the piece came from, its provenance, and the client's identity is absolutely crucial to prevent illicit financial activities.
Makes sense.
And then on top of that, you've got inconsistent international standards for this stuff and often very subjective valuation procedures. How do you value that unique antique brooch consistently across different countries?
Good point.
It can really complicate claim settlements and all this complexity. It can also deter smaller or newer insurance companies from even attempting to offer these specialized services.
So it favors the bigger established players, maybe.
It can do, yeah. And a particularly significant hurdle, for example, is just the persistent lack of standardization in appraising rare or bespoke jewelry. Values can be highly subjective, really difficult to quantify consistently. That's a tough nut to crack.
Okay. So looking forward then, beyond just streamlining the current processes, what are the really cutting-edge trends you see shaping this market right now? What does the sort of future of jewelry insurance look like?
Well, the market is undergoing a pretty significant digital transformation, and it's largely being led by AI-driven risk mitigation and personalization.
Okay, AI again. How's it being used here?
So we're seeing technologies like image recognition combined with blockchain-based verification, enabling essentially real-time appraisal of gemstone authenticity and value.
Wow, real time. So you could scan a ring and get an instant assessment.
We're heading that way.
Yeah.
Imagine getting an instant verified assessment of a piece. And mobile apps, they're making it possible for customers to buy usage-based or temporary coverage.
Usage-based, like car insurance sometimes.
Exactly. So for example, insuring specific pieces only for the duration of a trip or a special event. That offers incredible flexibility.
That's smart.
And then perhaps the most futuristic thing is smart jewelry itself. Jewelry embedded with GPS trackers.
Seriously, GPS in your necklace.
It's emerging, yeah. And this helps insurers and clients, obviously, recover stolen items in real time. That significantly reduces payout risks for the insurer and improves their loss ratios.
Loss ratios. That's basically how much they pay out versus how much they take in.
Correct. It's a critical measure of an insurer's profitability and efficiency. So recovering items is a huge win.
Okay, let's switch gears slightly and talk about something that reshaped almost every market. COVID-19. How did the pandemic actually affect jewelry insurance specifically? Did it slow things down or did it maybe accelerate some of these trends?
Yeah, the pandemic, it profoundly reshaped consumer behavior and priorities, much like it did everywhere else, really.
How so in this space?
Well, with people staying home more, maybe looking through their possessions, and definitely reconsidering their financial protections, there was actually a noticeable rise in interest in safeguarding existing jewelry assets.
Ah, like a closet audit leading to insurance thoughts.
Sort of, yeah. It was almost like this sudden realization of the value they already owned and hadn't properly protected. Plus, the rapid growth of online jewelry purchases during that time. That further reinforced the need for robust insurance coverage. If you're buying expensive things online, you want them insured from the get-go.
Makes sense. But were there downsides? Challenges?
Oh, absolutely. There were significant challenges,
Right.
disruptions in physical appraisals you couldn't easily go see an appraiser, and supply chain issues made it quite difficult for insurers to determine accurate valuations in a timely manner.
Right, everything slowed down.
Exactly. So in response, companies had to quickly embrace digital appraisal tools and remote assessment technologies. Necessity is the mother of invention, right?
Sure.
And while these innovations certainly kept the market functioning, maybe even pushed it forward in some ways, they also raised new concerns. Things about the security and the reliability of purely digital processes, which, the industry is still working through and addressing.
So, okay, to kind of summarize where we've landed, this deep dive really reveals a jewelry insurance market that's experiencing pretty robust growth.
Yeah, definitely growing.
And it's primarily driven by, it seems, rising wealth, some incredible technological innovation, and just evolving consumer expectations about what insurance should cover. It's far from the static, maybe dusty industry one might imagine.
Absolutely. But it's also clear, isn't it, that it has to carefully navigate some significant challenges. Things like that regulatory complexity we talked about and this ongoing digital transition. It needs to manage those to sustain its momentum and really thrive.
Yeah, it's a balance.
It's a balance of embracing all this cool new tech while making sure you're ticking all the compliance boxes, which are really complex.
Right. Which actually raises kind of a final important question for you, or for us to think about. As our world just becomes more and more digitally integrated, right?
Mm.
With concepts like digital ownership, NFTs, new materials emerging, how might the very definition of insurable value for luxury items continue to evolve?
That's a big question.
Especially when you consider pieces that might combine, say, traditional craftsmanship with really cutting-edge tech embedded in them. Or, for instance, what happens when a digital certificate or a unique blockchain identifier becomes almost as much a part of a piece's value as the physical stone itself? How do you ensure that?
That is fascinating, isn't it? What's really interesting there is how that interplay between the tangible value of the physical thing and the digital security, maybe even the provable digital provenance on a blockchain, how that's going to continue to redefine protection, probably in ways we're only just beginning to imagine.
Yeah.
It's definitely going to challenge how insurers assess worth and how they assess risk entirely. The definition of asset itself might shift.
A lot to think about there, Ray.
Okay.
The future looks complex, but pretty exciting in this space.
Absolutely.
Well, thanks for joining us for this deep dive today. Really appreciate the insights.
My pleasure. Always interesting to talk about.